Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's episode is sponsored by Building Insurance and Risk. When you invest in real estate, work with the experts at Building Insurance and Risk. You will receive multiple coverage offers with a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Jason Astor. Jason is the managing director at KBA Lease Services, a nationwide lease auditing service that works on behalf of commercial tenants to recover rent overcharges and reduce occupancy cost. And in just a minute, we're going to speak with Jason about how tenants can limit the effects of inflation on their commercial leases. But first, a quick reminder, if you like our show, CRE PN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Jason Astor. Welcome to CRE PN Radio.
Good morning. Thanks for having me, Darren.
Well, thanks for doing this. I'm looking forward to our conversation. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. So I'm a non-practicing attorney. I started in commercial real estate and structured finance back in the mid-aughts, which was not a good time to be in structured finance. So I think I sort of fortuitously found my way into this niche that we're going to talk about, which is an advisory service focused on helping tenants avoid the risk of somewhat overlooked overpayments. So having a legal background makes a lot of sense because you're looking at relatively complex contracts, right? Leases. And so I spend my day-to-day focused more on the business side of running the company as opposed to doing like a lease audit. But I'm brought in many times to help sort of think creatively about lease language, whether it's drafting or interpreting after it's been drafted. And of course, working on behalf of tenants with landlords to come up with some sort of satisfactory conclusion if there's an issue that we find.
Got it. So commercial lease services or KBA and your work. I'm going to give you an assumption based on what I believe, based on the little bit that I know.
Sure.
Without a service like you, I'm assuming a commercial space tenant is left to work with a broker and the landlord. Is that the traditional model?
Yeah, close. So this wasn't always a thing. Commercial focused lease auditing as a service you could go procure really started in the mid 80s with a guy called Mark Batesh, who was the founder of KBA. So pre that, you were probably doing it yourself, right? Whoever was managing your real estate and payments could have been someone in finance, someone in accounting, or actually a real estate professional was looking at these bills you get from the landlord and saying, do I feel comfortable with this or not? With the onset of this type of focused service, you would be either left to asking your broker, could you help me understand what you helped me get into, which is somewhat common. But brokers aren't post-deal experts, right? They're, and no offense to brokers, but right, they're transactional and then they move on. So their understanding of everything that could go wrong is pretty good when they think about it in advance, but they're not going into the books and records and the bowels of buildings and looking at accounting and accounting treatment. So I think a tenant would typically call their accountant, right? And they would pick up the phone and say, oh, I know that I need to look at, so I need a trial balance or a general ledger or something for the landlord because I don't have enough detail to understand why my costs went up like this or why I'm paying for this specific thing. So I think they might call their accountant, they might call their broker. But there are a lot of managed service companies out there now, right? So you have your Cushman and Wakefields and your JLLs and your Colliers and your Newmarks, and you have smaller versions of them that are more regional. You even have specific companies that offer lease administration services, right? So they offer that to landlords and tenants, right? Sort of like a data collection, data organization, all the way through checking and paying the bills or invoicing tenants on if it's a landlord side. So there's a lot of people you could pick up the phone and call actually and ask the question. I think the reason why we are what we are, we have a bunch of attorneys and CPAs and former property managers and brokers, is that if you really want to get into the nitty gritty, it's not math. You can call a lot of people to figure out the math. If you want to figure out, did my deal work, right? Or did something change in the market that no genius could have thought of? Because we don't all have crystal balls. Lawyers certainly don't. Brokers don't as well. You can't do that from an accounting perspective. You can't call your CPA, even if they're good at auditing, right? Going to a landlord and say, let me see your books and records. I want to see if you paid that bill. So of course they paid the bill. Right? Brookfield's not passing stuff through to tenants they didn't pay. The question is, should you pay it? And what does your lease say? And what does your lease mean? And what did your deal mean, even if your lease doesn't say it? And that's, I think, a very different approach. When people hear audit, they think green eye shade. Well, that shows my age, right? So
Right.
I don't think people do that anymore. But we think of it more as an advisory, sort of consultative, like almost renegotiation of like, what did you think was supposed to happen? What's fair? Yes, you have to be able to do math. Yes, you have to understand building operations. Yes, you need to be able to read a lease, but really you have to understand the deal, the context of the building, the context of the market. And nothing is proving that more than what's going on in the market today.
Right. So do you find that it's more of a present time reflection of what the intent of the lease was at its inception?
Yeah, I think you nailed it. I think that's right. Again, when you go back to the word audit, people think you're looking backwards and you're gonna unravel what happened. And the truth is, you need to, right? You need to understand what happened, what were the trends in order to sort of predict the future. The problem with that is most tenants don't have the ability to look very far back. So your average lease term, which obviously might change in the next couple of years, is 7 years because it's either a 5 or a 10, right? Big tenants take 15 or 20 because of the financing of those spaces. But if you have a 5 or 10-year lease, let's use 10, and you look at year 5, you might only be able to look back 1 year. So if there was a problem that germinated in year 2, you might be able to fix it by year 5, or it might be completely out of reach and you're kind of out of luck. So it is a proactive behavior tenants should get into. Many do, particularly those at higher companies like mine, where you negotiate a lease, you put it in a drawer, you spend your first year paying rent, operating expenses turn on the second year, right? They're billed, for the rest of the term. That's when you should look, not 6 years into a 10-year term. So to your point, exactly, right? When you want to look presently every year from the inception of that lease to say, is this working as it's written? And is this working as I intended? And I want to catch these things as they come up, because many of them are systematic. It's not a one-time like, oopsie, I passed something through to, a cost onto the tenant, you paid it, and then I never did it again. A lot of them are complicated equations or assumptions that landlord make, and they just get built into the deal. And so you go 5 to 10 years paying this thing, and you don't even think about it because it becomes sort of an assumed cost, but it may have never supposed to be there.
Yeah, I'm curious. I know my personal experience is that in things like this, the quicker you're able to bring the attention to it, the more likely you'll get a resolution that's agreeable, as opposed to calling them and say, hey, long time ago, this happened, and I was looking at it, and I think that I overpaid.
Yeah. Do you remember when?
Yeah, and I know even like with insurance, like with a claim, the information is most valuable in the immediately after the incident, not trying to go on somebody's recollection where it's I don't recall is the answer kind of thing.
Right.
So do you find that the reception from the landlords is similar? Are they much more agreeable, willing to work through something or adjust to meet the intent of the lease if it's brought right away?
I think that's right, and probably for two or more reasons. I think the main reason is, I think, parallel to your insurance analogy. If you let something go on for a long period of time, sometimes it becomes sort of a business accepted, right? And the landlord said, what do you mean, right? I've been doing this for 7 years, and it's built into my financial plan now, right? Like I've been budgeting, you're accruing for it. I'm budgeting to receive it. It's part of my income. I report it to TREPS or whomever, right? And so to your point, yeah, it's sort of like, why didn't you bring this up when it first happened, right? Your lease doesn't say I can't do it, right? So if it was a problem, why didn't you bring it up? So there's a little bit of that. But a lot of it actually boils down to the way this works out economically. If you wait, let's say you have the right to go back as far as you want. The way these things, and it's a bit maybe too in the weeds, but a way these things technically work out legally is each state has a statute of limitations for when you can bring up a claim, which I'm sure in insurance, it's very important to track that. So every state could be as short as 3 years, it could be up to like 11 or 13 years. A lot of them are somewhere between 3, 5, or 6 years. So if you just went on the state statute of limitations and you had a 5-year lease and the state statute of limitations was 5 years and you waited to the very end of the lease, you're asking for cash. You're telling the landlord, shame on you. You overcharged me $100,000 a year. Give me $500,000, right? That's cash, right? If you had a 10-year lease and you waited into the first 5 years, maybe they could excuse it as a credit, right? So now I'm not going to refund you, but I'll credit you, right? But still, it's completely screwing up really expected income. So if you bring it up early, the value is the same. The assumption is it's going to happen anyway. It's going to happen for the next 10 years, right? But if I catch it in year 2, not only do you not, as a tenant, pay the cash out, right? You're not giving your money away and then letting someone else collect interest on it, right? So you're actually keeping operating money. But you're also telling the landlord, hey, heads up, that $100,000 you plan to charge me, I'm not paying it. And you agree that I'm not paying it. The landlord now can do a ton of creative financial maneuvering so that doesn't look as painful. It's not $500,000 cash, right? It's totally adjusted. It can be made up on additional rent from somewhere else. And so it's a lot easier economically for both parties to do it that way as well.
Yeah, no, I can only imagine with accounting and the notes and all that stuff.
Yeah.
Explain that's kind of a tough one.
Well, also with ASC 842, which we don't need to get into, but it's an accounting shift in the treatment of leases. So now leases look like you own them on the balance sheet. It becomes what's called a right of use asset for the tenant. The lower your liability, the better, because now it's really affecting your books and the value of your company, right? It's affecting your cash balance, right? So if you can bring that cost down early, you recognize that day one. So now you can write down the value of the asset, right? And everything looks better, right? So it's, from a tenant's perspective, in my opinion, it's more important to do it early than it ever has been, because it actually it has a more positive impact than just saving you money, right? It makes the company look more valuable.
Yeah, no, that makes complete sense. Does your service, do you find that people are looking for this in advance of a lease? Is it when they get into a challenge where they can't make sense of things? When are you most likely to be brought in? I'm assuming ideally it's up front. You're a partner with the tenant and you're working with them. But do you find that the market is aware of this service, or are you guys a standard? I'm not really familiar with that.
Sure. I wish we were brought in more frequently. I always joke, you'd think it'd be the easiest thing in the world to sell a free service. We actually don't charge, we share in our result. It's impossible. People do not look for this. It actually still blows my mind that there's so many options for this now. It's become a bit of a commoditized boutique business, if you can have both. It's very rare that somebody picks up the phone and says, hey, KBA or anybody else, like, I need you. You already mentioned why they would. It's after the fact, somebody's boss gets an invoice on their desk and they look at it and go, wow, this is 6-7 figures higher than I expected. What the hell? Excuse my French, right? What do I do? And then they look around at each other and go, oh, there's this company that has been sending me emails for the past 13 years. I think they focus on this sort of thing. So that's usually when the phone rings. What's much more common is that tenants are aware that this exists. they are aware that they kind of need to check the box in organizing their lease data and organizing the financial elements around that. And when the other priorities have been kind of managed, they'll receive a sort of an incoming request from a company like mine to say, you know what, we should cover that. Why don't you come in here and start looking? So it's more of an outbound, to use a sales term, approach where we are in front of as many tenants as we can be, saying, but you really need to look at this, you really need to look at this. And they eventually find the time to do it. Or like you said, they have some sort of externality where they're like, I can't let this go. This is $3.5 million more than I expected. Like, pick up the phone. So we're still kind of plugging away and trying to get attention, although major tenants have been doing this and are aware of it for many, many years. It becomes a partnership. A lot of times, at least the way we try to articulate it, is we want our larger clients with lots of leases and a very regimented process for managing their leases to think of us as part of their team. You're going to get the bill, you're going to check it however you're going to check it, or you might outsource that, someone else checks it for you. They abstract stuff into a system for you. You're tracking all this great stuff. You're reporting on it. Our founder founded Visual Lease, right? That's a system to actually do that. There's quite a few others. Well, what do you do when you're done? Oh yeah, you know what? The Jason and his team, they're there. They're there looking behind the scenes every time we make one of these payments or we ask a question, and they're kind of going a little deeper. And that becomes part of the cycle of managing a lease. That's at least our aspiration, is that people see us like that.
No, that makes sense. I'm curious. You mentioned in the beginning about the change in accounting. Has that been an opportunity for you? Is that something where people are now more conscious of and looking more at their lease and wanting to make certain that whatever they're paying is owed?
Yes, I think it changed the buyer a little, right? Traditionally, real estate had been the domain of real estate. Right. It was a, guy or gal in the basement of a building, right? Kind of left to their own devices. And it's over the past 10 or 15 years, organizations like Cornet and IFMA and REBNY have kind of elevated the brand of the real estate person. And, not that COVID has a whole lot of silver linings, but one of the silver linings in the real estate world to COVID is that it brought front and center the human resources, right? Health and safety value a real estate person can bring, right? What is real estate to a company has become a big conversation, and how it, you want to use it to work or not. So the buyer was traditionally this real estate person who was worried about lease costs. With accounting now, the buyer might be the CFO, head of accounting, head of finance, some people even risk, right? There's some risk people looking over this. So it changed, I think, the importance of getting it correct. But I would have to say, if I'm being, fully transparent, it hasn't really filtered all the way down to what we do in terms of like, a higher priority. Like, oh my God, we got to go audit all our leases. What most companies tend to do is they take their rent, they take their additional rent, or your operating expenses, your CAM, your utilities, your insurance, your real estate tax, they kind of mush them together in a code, and they just add, that's my rent payment. So they're not really separating the two. In a way that gives us a great talking point. If you're blending these two things together as rent, and you're paying $80 a square foot or $100 a square foot in New York, or $65 a square foot, in Chicago or wherever, and then you're paying anywhere from $5 to $20 a square foot in operating expenses, you put those things together, and now you have to put them on your books. You should think of us a little more, because we can bring that operating expense down a couple bucks a square foot. That's a big deal. It's not a big deal in the grand scheme of things to these companies, right? Even their real estate costs. When you think about like JP Morgan, even, it's not a big deal. It's a rounding error. They're as big as their portfolio is. It's not that big of a deal to them. So we're down here. So it really hasn't filtered all the way down to us yet, but it should.
Yeah, no, it's always amazing to me how, things that seem like a big cost, but in the scheme of the client and their numbers, it's just like you said, a rounding error kind of thing. But I would assume that you have to look at it more as a duty to the to your owners, to your investors, to whoever that is, to yourself, to not overpay for something just because it's easy, or it's not a big deal. I think that computers, I feel like with all the data that's been collected and all the data I've input in computers over the years, it feels like it's finally there's the data science is actually something that's real, and that's actually, it's being used. I don't know, it's always being used for me. It feels like a lot of times it's being used against me. But there is an actual attempt to, sort through it and make sense of all the information that's been collected. And I think we're to a point now where that's more standard. It's kind of the transition from just, whatever to, oh boy. And, the exact stuff, but, yeah, I hear you. So let me ask you, do you guys, it doesn't sound like brokers or property managers are looking to refer you. It's usually the pain point of the tenant, when they feel the pain, that they reach out or realize this email you guys have sent or that they've received has value and maybe they should check into it. Is there any referral partners, or do you have anybody that's seen the value and tried to say to the tenant, mutual client, hey, look, you need this?
Yeah. Yeah. So property managers certainly know, right? I mean, not to say they go running when we come, but we're looking over their shoulder, right? The property manager is the one who puts a lot of these costs together, and so we're the ones who question them. Tenant rep brokers, right? Not agent brokers, agency brokers. Tenant rep brokers, right? Your occupier side refer us all the time. Frankly, what's interesting is in our opinion, right, the top producing brokers in most markets are some of the first to actually bring us in, because they recognize the value of the service when everything gets as complex as it can. If you have a very basic lease and you're a small tenant in a regular, like a Cincinnati or a Portland, wherever, like a regular market, right? There's very complex deals going on there. But if you have a 5, 10, 15,000 square foot lease and you don't have a lot of bargaining power in the building, you're probably going to get a template lease from a landlord and you're going to agree to a lot of it, right? And that's although from a volume perspective, you might be a tenant broker's kind of core client, you're not their dream client, right? Their dream client is the 50, 100,000 square foot tenant that's going to, pay for their kids' college in perpetuity. So the higher end the deal, the more relevant we become. And the brokers and the lawyers at that level all know it, because the amount of negotiation that goes into these leases, not just in our part, but specifically in our part, is so sophisticated. And these buildings are very complicated that everybody knows when the parties walk away and the landlord brings in, a group of people to manage hundreds of leases all at once that have thousands of different lease terms, and the tenant goes back to doing whatever the tenant does, and the broker goes back to being a broker, and the lawyers go back to being a broker. No one's looking at this at the level that they negotiated it at. So yes, if the higher end the deal, lawyers and brokers actually do bring this in. Same kind of thing. We end up calling them and asking them, hey, you should pay attention. They go, yes, we should. And then they do. But yeah, those are our biggest referral partners, would actually be the law firms on behalf of whom we work, right? So we work on the law firm leases in an audit capacity, and we also work on behalf of their clients in the same capacity. And then the brokers. There are also smaller companies that are standalone lease administration companies that will manage the life cycle of leases for companies, and they'll actually tie us into the back end of their administrative process, as I mentioned before, where they're checking everything and they're putting everything in beautiful spreadsheets and doing what's called a desk audit, right? Just kind of sitting there looking at the general categories and making sure there's nothing, flying off the page at you. And then we show up and we actually become a regimented part. So they'll actually bring us in as well. So like a Scribcor or even a Cushman & Wakefield or JLL will kind of plug us in when it's appropriate.
Got it. With respects to the different asset classes, is there a limit to the different asset classes? I mean, I'm assuming office and retail, I'm assuming are big clients. Do you also work with industrial, warehouse? Is there any limitation to the different types of asset classes you can work with?
Yeah, not really. There's, like you said, I think there's a prioritization of them just based on the structure that the lease takes when it comes down to what you pay for. So as a tenant in a skyscraper in San Francisco, you have a couple floors of the building, or a single floor, half a floor, doesn't really matter. It's not your building. You are paying almost everything to the landlord, right? In one way or another, right? You're not managing your own services for the building usually. That's about the most complicated and expensive as it'll get. Going down the chain, if you have a warehouse, for instance, you usually have the warehouse. It's your warehouse. Now, there are huge facilities where you share warehousing space and everything else, but if it's your warehouse, even if you're leasing it, you're controlling a lot of the expenses. So it still might be expensive, but they're within your control. They're not being passed through to you by a landlord who's making subjective decisions about what your lease says. So the warehouse situation has less opportunity, usually because it's cheaper and because there's less expense being kind of muddied through the landlord's decision to bill you. So the way we look at this internally is there are leases called modified gross leases or base year leases. They tend to be the most complicated and cause the largest ongoing problems when they are wrong. And they have been very, very wrong in the past 2.5 years due to COVID, which we could get into. Then you have net leases, which is the common United States leasing function. That's still a skyscraper or any kind of other office space or even industrial or manufacturing space are often net leases. The difference there is you pay rent to a landlord, vacuum, and you pay operating expenses to a landlord in a vacuum. In a base year lease, you actually don't do that. You pay rent, and then in the following years, you pay your pro rata share of the increase that the landlord passes through in operating expenses. So your rent's going to be higher, your operating expenses will be lower, but they're muddied. So those are the two common. Once you get into like pure warehousing, industrial built to suits, those are called what's traditionally called triple net, which means that you are responsible for paying your taxes to the authority. You're paying your utilities to the utility company. You're paying insurance to the insurance company. You're handling everything. There really isn't a landlord billing you much. Although there is a landlord and you're paying rent, that's about it. You're just paying rent.
Right. No, it makes sense. So speaking of COVID, tell me how COVID has changed or has it accentuated the need for a company like yours? I mean, have you found that there's some opportunities in the lease for tenants to take advantage of service like KBA?
Yeah, not to trivialize things, like what we do again is kind of tip of the tail, right? So COVID has done a number on everything that has to do with commercial real estate. But in our little world, yes, COVID exacerbated things that already happened. If you think about a building that typically operates with 85 to 100% occupied, right? And what I mean is people, butts, right, in seats, 85% to 100% of the sort of assumed amount of people that can fit in the building. COVID happens and you're operating between 5 to, if you're lucky, 40%, right? So it's usually probably still hovering around 20. I think Castle Systems saw in some markets you're getting 40 to 50% on a high day, but not across the whole week. So when you think about that, the costs to operate the building are significantly depressed because you don't have as many butts in seats. You still have the same amount of leased space, though. It will go down, right? No one knows by how much, but people are obviously paring down their square footage because they don't need as much space. But the current situation is very unique. You have a 1 million square foot building that's 90% leased, right? And no one's in it. So the operating costs are now depressed, but they still have a rent roll, right? They still have a lot of people paying rent. So what do? Right? There's a methodology in real estate and other industries as well called grossing up, right? You look at a number that's not what it should be and you kind of artificially inflate it. There are really good reasons for landlords to gross up certain costs that they pass through the tenants, and it's fair. They should do it. Otherwise, they kind of get screwed. There are also reasons you don't gross up. And so it got really confusing for landlords and tenants during COVID because you have this artificially depressed cost basis for operating expenses. If you grossed it up, but your building was still fully leased, aren't you making more than you should? You should only make what you spent. That's the deal. The deal is the tenants are going to help you pay your operating expenses, not create a profit center. So it causes a problem. You don't gross up because people don't come to work. You gross up because you don't have leases. That's right. They have leases, right? So you would absolutely, so if you had a building that was 100% occupied and 100% leased, you don't need to gross up. If you have a building that's 50% leased you gross up. You got to make things even. If you have a building that's 100% leased and 50% occupied, you shouldn't be grossing up. You are creating a profit center. So that COVID created this confusion. And it's not that some landlords probably looked at it opportunistically and said, I do it anyway. My leases allow me to do it. I'm doing it. There's no definition of what occupied means. It doesn't say leased versus humans running around my building. And I think some landlords just didn't know what to do. And a lot of them did, and they did the right thing, right? Kind of all over the map. That same concept affects what I told you before, the complicated base year leases, which you see in your coasts usually. The coastal cities tend to use the base year methodology. If you walk into a building and it's fully operational and fully leased and people are there, you can assume that that's what it costs to run the building, right? So when you set your basis, it's $1 million a year to run my building. All right, so Darren and Jason go and we get our lease. We know it costs $1 million a year in 2022 to run the building. I'd expect, other than this crazy inflationary period, a 4 to 6% increase next year on what it costs to run the building. So next year it'll be 4 to 6% higher than that million. You and I will pay our share of that spread, that 4 to 6% increase, not the million, just the increase above the million.
Right.
What if we went into that same deal, but the building was empty? Now it's not going to look like it costs $1 million to run the building, is it? It's going to look like it's going to cost $500,000. So now our starting point is $500,000. And then in 2023, 50% of people showed up, but that's going to double. Your spread just went, now it's costing $1 million. It doesn't go up by 4 to 6%. It goes up by 100% or 80%. You and I are paying that spread now. Is that fair? We're getting crushed, and we'll get crushed forever until we get out of our lease. That spread is just going to keep getting bigger. So COVID caused this really confusing sort of nexus between, like, what does it mean to be occupied? What does it mean to be leased? How do I design my pass-throughs for a base year versus a net lease versus an escalation year? I'm not throwing a lot of terms out. And it caused, I wouldn't say pandemonium, because again, we're talking about operating expenses. It's not the end of the world, but it's caused a lot of confusion. And it has created an opportunity for us to help people clean this up.
Yeah, no, the whole conundrum of, the office space. And just like you said, on a good day, 40 to 50% of the people are showing up, not every day kind of thing. I mean, that's a total shift on the expenses. And I would expect that there is a little bit of confusion and it just, I guess there's an opportunity for you, and there's a kind of an opportunity for the tenants and even the landlords to try and, reconcile and get on the same page and recognize the expenses are different. But that's great. Do you guys have any kind of requirement that you have boots on the ground, or is this all something you can handle through if I'm in Portland, Oregon, and I've got multiple leases and I contact you, can I just email them to you and you guys look through those and then the books, or is there any reason for an actual physical on the ground inspection?
Yep. So kind of going back to the point you made about data collection and organization kind of coming into its maturity recently, where you can actually use it. Same thing happened in our industry. This used to be a get on an airplane or have an office in every city you need. So you could go into the landlord books, office and look over their papers. And we used to have a staff that would take, I don't know how old your listener base is, but they would take a portable copy machines, like in a little thing, and we sit there and copy. So now everything's digital. I mean, so from a engagement perspective, a client of ours, which would be a tenant, can email us their leases and bills in under a second. So it really takes nothing for them to just, you have one lease, send it. If you have 100 leases, put in a Dropbox, we'll go grab it, right? It's very, very simple. So our initial assessment is that it's like, let me get your leases, let me get a couple of your bills and your operating expense reconciliation statements. It's just a couple of documents, put it somewhere I can grab it. It's all confidential. And we just sit quietly and look at it, right? We don't talk to landlords or anyone else because, like you said, we're all becoming data companies. We have a wealth of data on what buildings cost to run. And most likely we've seen it if we work for mostly like your TAMI and fire companies, right? So major tech, major finance, major professional service, insurance, so forth, a lot of media, anyone who's using big offices or at least had. So if you think about it, it's data that they've collected and they all go to the same buildings, right? Like a certain type of company likes One World Trade Center, a certain type of company likes the Embarcadero Center, right? Like So if we've looked at it once, it kind of looks the same, right? Not the lease, but the cost structure of the building. So if we have one tenant in the Embarcadero Center, we should probably get a few more because it kind of helps us, to continue to contextualize. We never trade data, right? We don't use information if we've gotten it from a landlord at one building for another tenant. But usually if something's occurring in a building that is negatively impacting one tenant, it might actually be happening to other tenants, right? So we have a whole database of this stuff. So tenants, I mean, you'd think it's like if it takes you an hour of your day once to send us a bunch of information, and then we'll come kind of process it and come back to you and say, this stuff looks great, this stuff's on fire, this stuff we don't know, we'd have to ask further questions. It's like, why not? With technology, we can do it all over the world, which we do. Most of our clients have really big portfolios, they're Fortune 500 and so forth. So we sit in New Jersey and New York. We have offices all over the country. We don't anymore because we never have to go anywhere. Sorry, I should say we rarely have to go anywhere. Some leases do have a requirement. A lot of Toronto leases actually make you go to Toronto, but usually you got to get around it because landlords don't want you in their building either, right?
Right. Snooping around there, kind of, hey.
Exactly.
I was just sitting there thinking as you were talking, it almost sounds kind of like a cost segregation of a lease, kind of a, and again, not that they're the same, but just kind of the analysis of, what's all in the lease and trying to find where the opportunities are. And, it's not a tax thing like a building cost segregation study, but it's still just, kind of getting in the weeds and really,
it's not dissimilar. If you think about, take your average law firm or media company, right? What they have a variety of roles that use space differently, or a bank, right? So you have people who are in trading floors, right? You have people with huge screens, you have people who want to draw on whiteboards. I mean, there's any number of different uses for this type of space. So when they take a lease, it's not just rent, right? From a cost sector, right? You have rent, you have the operating expenses, however that's being passed through, but you have a bunch of rent, right? You have people who are cleaning the space. You're paying, depending on what market, you're paying taxes to the landlord. You might be paying taxes to the city, right? If you're in New York, for instance, you pay commercial rent tax. You're actually paying a tax to New York for the privilege of leasing space in New York. And I love New York and I want to keep my job and I want to keep auditing leases, but that is kind of ridiculous.
Yeah.
But it'll keep, right. So there's all of these costs attendant to rent. Everyone talks about rent is too high. I can't say who, but a really big tenant in downtown Manhattan told me the other day, I'll edit the cursing. Rent doesn't screw you up. Everything else screws you up. You know what your rent's going to be. It's everything else. In New York, New Jersey, Connecticut, some tenants pay $5 to $15 a square foot for additional cleaning. Think about having 100,000 square feet and paying $10 a square foot just to keep it a little cleaner than the landlord's gonna, right? That stuff can screw you up. So it is like a cost. If we look at all that stuff, anything you pay, because people pay, Swiss Post for mail services and laundry and all this stuff. There's all these things people forget about. So you're right? There's rent and then there's everything else. And rent's always the big boy number, but these numbers add up.
Yeah. Hey, you referenced it in the beginning. I just wanted to kind of go back and make sure I understood your fees. It's a free service, but did I hear you say that you basically have if you can get somebody, a couple $1 million back, is that do you have like a percentage agreement then that you get a percentage of that? Is that?
That's right.
Okay.
Yeah. I say free service, because I'm
right. But there's no upfront cost. It's more a matter, whatever. If I can get you money back, I'm going to get a percentage of that. You're going to win. Right. And is the winning is your fee then, is it a one-time fee or is it like like an ongoing fee now that you found this, this discount?
Yeah.
Money.
It depends on the structure of the settlement and the type of issue. Right. So to your point, there are literally no costs. It's not like some sort of hook 'em and got 'em thing. Like if we can't save money and it's not a realized, factor, we don't charge anything. So there's a lot of tonnage we go through before we get a what we call a hit, right? Because a lot of these issues are too small for a tenant to care about, right? A couple thousand here or there, nobody's going to go banging down doors, right? So to your point, if you can save 100,000 or a million, we see a lot of mid 6-figure, low 7-figure claims. Those aren't usually one-time hits. Like that would be a pretty big mistake or really big space if you got whacked with a 7-figure one-time mistake. What tends to happen is we structure a settlement. Going back to our discussion before, like when do you do this? We try to structure a settlement that makes it easy for everybody and fair for everybody. It's not, hey, Mr. or Mrs. Landlord, give me $6 million today. This is a $6 million. I wish, right? Because I get my fee up front, but nobody expected this. Let's fix it. The value to the tenant is $1 million a year for the next 6 years. So as that is recognized from an escrow perspective from the tenant, we share in it year over year. So we're basically putting we're subrogating into the tenant. We're putting our feet into the shoes of the tenant, saying, if you're here for 6 years and you save $1 every year, I'd like a piece of that dollar. Do you agree? And they go, sure, of course, right? If I can't get you $6 million today, but I can get you $6 million over the next 6 years, what's the difference, right? The difference is just when you realize it and how I get paid. So to your point, if there's an issue where we catch the landlord, I don't know, charging for landscaping and the lease literally says no landscaping and it's that cut and dry, one time, right? You charge me for landscaping, give me my 20 grand back, KBA will share in the 20 grand. If it's something a lot more complicated, like you're supposed to pay for landscaping with all of these crazy calculations and caps and none of them are working, the assumption is you would pay this crazy, weird, unworking way for the next 6 years. If we can fix it now, you actually don't get any money back. No one, right? There's no money today. We're just saying don't do it that way in the future. We have to share in what happens to you in the future. Otherwise, there's no value, right? So it's it really depends on how we can structure the settlement. There are situations where landlords and tenants want to just get it done with. We've had huge $20-30 million settlements where the landlord goes, what if I just give you the net present value of it today? But sure. Maybe not wise if the tenant cuts out early or, you've actually, they wouldn't have paid it, but it really just depends on the parties and the type of issue.
Yeah, no, if you can get the cash today, go for it.
Absolutely.
Good. Hey, Jason, if we could, I'd like to shift gears here for a second. As I've mentioned, by day, I'm an insurance broker. And as such, I work with my clients to assess risk and determine what to do with the risk. And there's 3 strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And when we cannot avoid nor minimize the risk, we look to see if there's a way to transfer the risk. And that's what an insurance policy is. And as such, I like to ask my guests if they can look at their own situation. Could be clients, investors, the political situation, interest rates, however, COVID. But if you can take a look at your situation and identify what you consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer.
Got it.
And so if you're willing, I'd like to ask you, Jason Astor, what is the biggest risk?
In my little space, the biggest risk is willful blindness to what you should be paying for your lease. You spend a lot of money and time getting into these major leases, hundreds of thousands of dollars in legal fees, brokerage, millions in brokerage fees, depending on what party you are, FF&E fit out fee, $200 a square foot, a huge amount of money getting into them. I think you mentioned this before. It should be your duty, if you're going to spend this amount of resource to get into it, to make sure you're getting what you're supposed to out of it. So the biggest risk is just being willfully blind and not having an expert and just look at it behind the scenes. The interesting thing about risk in our space, and kind of in relation to the way you described your day-to-day work, is operating expense pass-throughs is a risk adjustment. That's what it is. The landlords back in the 70s, they just charged rent. Like a lease when you were a kid in an apartment, like you paid your rent and they factored in some amount into it. And then one day, their insurance policies went up. There was a fire somewhere. Well, now the rent's not enough. What do? You got to pass it through. You have to shift the risk. Operating expense theory is a shifting of the risk. The landlords have said, back in the 70s, it's too much risk. Look, think about all the things. Inflation is happening too fast. Rent's not enough. I don't have the ability to jack my rent up. In my insurance policy, taxes are going up, right? The union bargained for something, right? 32BJ in New York bargained for, better fringe benefits. And now I have to pay that. I have to figure out how to reallocate the risk of operating my building across my tenant basis because I can't bear it anymore. That's what operating expenses are. They're an adjustment of risk. What's happening now from a risk perspective, other than just please don't bury your head in the sand and just pay whatever the landlord tells you, is inflation. How do you avoid inflation? It's hard in a lease because leases happen one time and then you sit in them, right? In your world, insurance, landlords pay a fortune, as you know, for insurance. And they have every right to pass that through. Guess what they can't control? The cost of insurance. So if inflation increases the cost of insurance, or some pandemic increases the cost of insurance, or some environmental thing, they got to pass that through. So that's considered an uncontrollable cost, right? Landlords can't control insurance. They can't control taxes. They can't really control, within reason, the amount of money they spend for utilities. So when you negotiate a lease, landlords will fight, as they should, to say, I can't control these things. We're going to call them costs I can't control. You just got to pay your pro rata share. It is what it is. I'm not going to fluff it up. I'm not going to put a percentage on top of it. So if I pay $1 for insurance and you have half my building, I'm passing through 50 cents to you. And that's fair. The other bucket of things, all of the other things, cleaning, security, right? Certain common use of things, that is controllable. Who you hire, what rate you pay for it, what costs to manage your building. It's big numbers sometimes. Those are controllable expenses. And that's where tenants can start to adjust their risk, including caps to, cap inflation, right? If inflation is causing the rise of payroll is going up in the CPIs, going crazy, what do? Well, if I think about it in advance, I go, inflation is usually around 4 to 5%. What if I cap some of these costs that the landlord can control? Now I'm adjusting my risk because I don't have to worry that if we hit a hyperinflationary period, that I'm ever going to pay more than this 5% cap on these costs. Now, this is only fair to a landlord if these are costs the landlord can purportedly control. And that's the rub, right? That's where you need lawyers. How do you argue what's controllable? If I'm a landlord, I would go, I can't control payroll. I'm in a union state. They tell me, pretty good argument. I would call BS, but if you're a tenant and you're not well represented, you go, you're right, you can't control payroll, right? But there's all these really interesting nuances, and it's all about shifting risk. It's all about shifting the risk of operating one way or another. And the bigger and badder the tenant, the less risk they're going to assume, and the more they're going to push back on the landlord. And in today's market, landlords are happy to have tenants. So you will see, if you are a company looking to negotiate a lease, maybe you're negotiating a smaller one, but you're still negotiating, you might actually have an opportunity to adjust shift some of the risk back to the landlord in the operating costs of your lease. That's what I would say. And the landlords are going to do the opposite, right? Rents are going down in some markets. This is an insane market, right? You can go to the middle of Manhattan and rents have never been higher. Commercial office rents. One Vanderbilt, Hudson Yards, one Manhattan Rest. You're talking about $250 a square foot. People are gobbling it up. 3 blocks over on 3rd Avenue, can't give it away for free. Crazy, right? So if you're a landlord and you happen to have great product, you're pushing the risk to your tenant. You want to be in here. Right? If you have a half-empty building that was built in 1976 and nobody wants to be there, it's a free-for-all.
Got it. Well, Jason, I can't say thanks enough for doing this today. Before we wrap up, where can listeners go if they would like to learn more or connect with you?
Probably to an institution, because why would you want to learn more about lease? So we have a website. It's kind of just a placeholder. It's www.kbalease.com. It's kbalease.com. It'll give you all the information you need about the company. My email address is jaster@kbalease.com. That's my name, my first initial, my last name. I accept emails from anybody. Love to talk about it. We live and breathe this stuff. It's largely an educational process, right? When you sell something like this, it's like the value is sort of obvious. It's like, finding change in your couch. You don't need it, but you take it if someone handed it to you, right? But think about what's at risk. you talking to my landlords, you're talking to my vendors, so it gets very complicated. So it's usually people are wanting to be educated, and then they make that decision of, okay, this is worth the risk, which in our parlance, there is none, because we're just doing a confidential assessment, but they have to learn that. They have to get comfortable. So the website's kbalease.com. My email is jaster@kbalease.com.
Awesome. Jason, again, I can't say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Yeah, this is thrilling. Thank you so much. That's amazing questions, by the way. Very good job.
I appreciate that. Thanks. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.